Welcome to Yellow Tunnel. My name is Val Carpel. I'm CEO and founder of Yellow Tunnel, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, see how much further the rally can continue, what are the opportunities in the market, and see if you have any questions about your subscription. Disclosures are very important. I'm going to go through specific trade ideas, so please take a look at the disclosures. If this is the first time you see the disclosures, I encourage you to visit the link optionscreening.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisors prior to making any trading decisions. Trading psychology is very important. Dr. Simon, Mr. Simon, doctor, welcome. One of the reasons I started Yellow Tunnel is to talk about trading psychology. It's not only important to read the charts and look at, listen to the press conferences and earnings calls, but it's also important to predict and understand how you react to certain market conditions when volatility expands and we go through these 20, 30, 40% drawdowns. How do you react to these conditions? So trading psychology is important, and we'll touch base on that. But let's first talk about current market conditions and support and resistance levels and what to expect, short-term, medium-term, long-term. So if you look at the aggressive power trader, right, this is one of our main models that provides signals, short-term signals. You can see that we have today the model sees spiders is in the support 557 over and overhead resistance 580, and we're trading 562 right now. So 560 is a very important level. Model does see that. Basically predicted for today that we're not going to break through the 560 level. Model's doing a good job today. We actually, at the open, we did, I think the low for today was 558, right, on SPX. So 558, and for now, bulls are able to hold the 5600 level. And that's what the aggressive model is actually predicting for the spiders level. So 557, actually 557 is low. We got to the penny in today, and overhead resistance is 580. So I agree with the model. For the next few months, it doesn't see a lot of momentum outside of 580 level, right? If you look at the model long-term predictions, it basically says 580 is the main overhead resistance, and short-term, also 580 is the overhead resistance. So so this is the model that Yellow Tunnel runs on daily basis and provides you different signals, like Microsoft, General Electric is also a short-term signal that you can manage. And if you superimpose this with the positioning data, so now I'm looking, instead of a model that learns and trains on the data, makes forward predictions, I'm looking at Peter, welcome back. I'm glad you could make it. I haven't seen you for a while. Thank you for joining. So if I look at the now positioning data, right, this is purely supply and demand for option contracts at different strike prices. So you can see right now the largest positioning is at the 5700 level, right? So you have the largest position in terms of open interest between people buying, selling to open, puts and calls, selling to open puts. So if you take the aggregate of that in the June and May contracts, 5700 is the large level. And the idea that at 5700, it acts as an overhead resistance. We've seen on Friday and Monday, we basically reached that level almost to the penny in SPX. We reached 5700 and we retrace back. Right now we're at 5600, right? So these are the two main levels going into Fed decision on interest rates. Earnings season is kind of I think close to 75 or 80% of all the S&P 500 companies already reported earnings. Maybe Nvidia is the only unknown at the end of the month, but kind of mixed bag. We had a home run from Microsoft, maybe underwhelming earnings from Apple, strong earnings from Netflix, maybe underwhelming earnings from Tesla. But it's definitely a market where you have to pick stocks that are outperforming general market conditions. So these are the two level of resistance, right? 5,700 is resistance number one. I should probably change that color. Let's see. Yeah. So this is resistance number one. And at 5,800 is resistance number two. Right? And basically our yellow tunnel model, both short-term and long-term, says that we're not going to get above 5,800. I mean, that doesn't mean that if we have some positive catalyst, like we sign an agreement between China and United States, right? If we come to letter of understanding, right, memorandum of understanding in terms of terms and conditions under which China and United States will operate, then most likely we will be able to break through this level, 5,800. And same could be said on the downside, right? On the downside, you see main support is 5,400 and 5,500, right? We've seen these levels before the Liberation Day, after Liberation Day, and they are pretty well positioned. Not as much positioning as at 5,700, 5,800, but still pretty well positioned. And 5,400 was exactly the last week lows. So that's your support number one, right? And support number two, right? Today we briefly broke through the 5,600 and now we're trading above that. And basically going into the interest rate decision tomorrow, right? Fed has started meeting today. Tomorrow we're going to have a press conference. If the net in the press conference is positive, let's say Powell is going to say, we're committed to, I don't know, 2-3 interest rate cuts. I think that market will take that as a positive news, that at least what they said in last year, they were committed to 2 interest rate cuts. This year, he will confirm that. And then market could quickly get to the 5,700 or 5,800. Any questions so far? Okay, give me 1 second. Sorry about that. Sorry about that. Got a little distracted. So those are support one, support two, resistance number one, resistance number two, going into the Powell's Fed decision tomorrow. So again, if net it's positive, maybe Powell will say we do see symptoms of tariffs, inflationary pressures. We're definitely going to commit to 2 or 3 rate cuts or 4 rate cuts this year. That will provide clarity and certainty, and I think market will maybe not going to break 5,800, but at least break 5,700 and get to 5,800. If it's going to be negative, right? If he's going to say, what, we need to raise interest rates to combat the inflation, right? Or something the opposite, right? Or they see that signs that hard, macroeconomic data is actually supporting that, there's a distress in the system, the economy is slowing down, unemployment, is getting worse, then we would have a quick retest of 5,500 or 5,400. So both scenarios are possible. If he doesn't say anything new, if he just regurgitates what he said last time, that he's not sure about economy is strong, but it's unclear how much inflation the tariffs will cause, or what the tariffs will be, or for how long the tariffs will be. Then if there's no new information, then I think we're going to be trading between 5,500 and 5,700, right? Trading is about probability and distribution of possible outcomes, right? Anything beyond 5,800 right now is more than one standard deviation move, right? Which happens, less than 30% of the time. Move beyond 5,400 is the same thing. This is more of a 2 sigma move at this point, and something new has to happen in the market for it to break. So I think we're trading at this level because if you look at Bitcoin today and you look at the credit spreads and you look at the repo markets, right, the liquidity and seasonality, I still think there is a little bit room to the upside, right? So I still think we're trading in kind of a short-term rally within longer-term bear market, right? With market dropped 20%, anything above 20% considered to be a bear market. So I do think we will revisit the lows sometime this year. The question is when. Will it happen tomorrow after the FOMC decision? Less likely. Or will it happen, next time, we re-escalate the tariff negotiations, right? Kind of what happened 2018. So I still think we have a 2018 playbook where we're going to revisit the lows maybe several times based on the either escalation of tariffs or some kind of a black swan event. Maybe one of the hedge funds will, go under, maybe some regional banks will see distress. But those events are very hard to time, right? You need to have an event and then you have the kind of new shift in equilibrium between bulls and bears. So any questions? Sorry, one second. Sorry about that. I have some issues with my car. Sorry, one more. All right, sorry, I apologize for this delay. All right, so that's how I would look at the market, right? I still think we're going to revisit the lows. Um, but the timing might be difficult. So if you look at those two standard deviations, this is an exercise that we usually do, right? On one standard deviation, we're revisiting we break 5,700 and get to 5,800, right? That's the one standard deviation move, right? We basically revisit 5,800. So scenario number one, the one sigma move, we're trading beyond 5,800, right? The second scenario, bear market resumes and we revisit the lows, right? Because the inflation is worse than expected or there are signs of recession. And then scenario number three, we're trading in the range where one standard somewhere between 5,500, right, or 5,400, right? That was the main support versus 5,700, 5,800 resistance, right? So that's scenario three. So I encourage you to go through these positive and negative rehearsal exercises, right? Scenario number one, scenario number two, scenario three, so you can determine how much money you're willing to invest into the market and how much exposure you're willing to take. Ismail, welcome back. Let me know if you have any questions. Just type in Feridun. Uh, Welcome. Sorry if I mispronounced your name. Heritash Feridun. Also, text, type in questions inside of the, if you have any questions. So determining position size, let's say you're bullish and you think we're going to break through the 5,800 and you say one, right? Then how much money are you willing to invest, right? You need to find a reference point, at a stop loss at which you say, you know what, I need to turn more bearish, right? I was wrong, scenario one doesn't play out, so now I need to be more bearish. Because we are trading in the traders market. I think passive investment will underperform this year, unlike the past 2 years. So it's a trader's market, and you do have to look at technical analysis, some support resistance levels, and be able to be flexible, right? Adjust or adapt to the changes in the current market conditions. So, you can be bullish and you can say, okay, we'll revisit 6,000, but if we do drop below 5,500 or 5,450, I would encourage you to be maybe more bearish. So these rehearsal exercises basically help you to determine the position size, right? How much money you're willing to invest to support your opinion, and whether you're holding this position for a few months or for a few weeks or few days, based on your trading style, the process is the same. So all right. Any questions? All right. So how many of you say one? We're basically going to move beyond one standard deviation to the right, right? Market is going to revisit the highs around 6,000, 6,200. That's scenario number one. Scenario number two, no, we're going to revisit the lows. And we're talking about, this is May and June expiration, right? In the next couple months, we're going to revisit the lows, right? Scenario number two. And scenario number three, it's just a choppy market and we're just going to trade in this 5,500 to 5,800 range. Local time. Yes, I apologize for the time change. something did come up today where I wasn't able to meet at 12 o'clock, but I appreciate you joining. And if you have any questions about the Yellow Tunnel subscription or some of the models, let me know. Peter too. So Peter thinks we're revisiting the lows. Okay. Thank you. Dr. Simon, Ishmael, Feridun, any 1, 2, 3? I'm gonna go with 3, right? I think short term bulls are in control and gonna stay in control. And I think just the price action today and yesterday, you can see that bulls are stepping in, right? Bulls are stepping into for market pullback. So I think last week low around 54.50 is gonna hold short term. And we're probably going to retest 5,800. I don't know if it's going to be during NVIDIA earnings by end of the month, or it's going to be after Powell's speech tomorrow. That remains to be seen. But for now, I think it's a choppy market, right? That, and we're trading something like that for the next couple of weeks. And the pullback, again, I'm going to rely on seasonality. Probably, I mean, July and August has been pretty bearish for the past few years, and I think this year is going to be something similar. Sometime in July, August, September, we're going to have that pullback. Yes, yes. So all the recordings you can find here under trend analysis. So if you go to trend analysis, question was, where do you find the recordings? Every week we post these recordings here, and you can watch them, right? So I encourage you to create a account, right? Register. Then you'll be able to find recordings are actually free. So you can watch the recordings of these events under trend analysis. Thank you, Feridun, for that question. And you go, some of my supporting, information, why I think this way. Bitcoin, right? You can see as long as Bitcoin is above 90,000, this is a risk-on environment, and people do want to buy high beta stocks. As long as you can see that Microsoft is making new, or at least approaching all-time highs, and high beta stocks continue to trade higher, doing kind of a catch-up game, I think there is more room to this rally. But it is getting thin, and I would probably not chase the market. Instead of chasing the market, I would wait for pullbacks and buy in pullbacks. So Bitcoin is doing well. You can see junk bonds are also stable and doing well, right? We have a sharp rebound from April lows. And as long as we don't have a precipitous drop in high yield, I think that's also bodes well with the high beta risk on trade for at least, maybe May and June. How do we help on Yellow Tunnel? We have few services that you can use. One is aggressive power trader. This is where the model runs every day and provides you with the signals, like today, General Electric, Microsoft. But you have to make a decision on your own, right? You can basically, if General Electric reaches 202, consider it a buy. At 210, probably overdone, and maybe you want to trim your position. If I do trade any of these signals like General Electric, then you will actually see how I trade option, right? So you can see option trades, you can see stock trades, orders, positions if I trade them, and then every day model runs and gives you signals. You can go to AI analysis and type in your own signal. Let's say you want to know Citigroup, right? What do I think about Citigroup? The model thinks. So it will show you what the short-term, long-term trend for Citigroup. What the key support and resistance, maybe buy at 68, close at 70. And long-term trends. So you can also enter your phone number to get SMS messages, and that's user, and this is aggressive power trader. Weekly power trader is a similar model, but it runs every Sunday, and the predictions for longer term, right, for a couple weeks up to a month, where you have your support and resistance levels. Jeff, welcome back. So you have, JP Morgan, General Electric, Philip Morris, PWR. These are some of the longer term predictions. You can see long term, Philip Morris is still in strong trend. Model sees the long trend to continues. Support 170, overhead resistance that's 173. As long as Philip Morris continues to grind higher, this could be another candidate for your portfolio. And I use these signals in my own portfolio. So dynamic power trader, where I trade stock and options, right? You can see, I have position in Microsoft, JP Morgan, General Electric. You can type in again your phone number. You'll get an SMS message every time I trade these signals. And they're a combination of both stock and option trade, right? You can trade Microsoft at the spread, right? I'm long Microsoft spread, or you can, just buy a stock, right? So I'm long Microsoft at 435. So that's dynamic power trader. It's a combination of both stock and option trades. Earnings power trade is where I trade earnings announcement, like Coinbase, DoorDash, Pelletier. Right now I'm in Pelletier trade, right? I sold a put spread and bought a calendar call spread. So I'm managing this trade, trying to see if I can close, if Pelletier can rebound. I haven't seen how's Pelletier doing. It's down after the earnings. At least it was down more than 10%. So now it's down 13%, close to session low, but still above the support level. So for now, I'm watching Pelletier. What else? And finally, Profit Accelerator. Profit Accelerator is where I trade stocks, right? So you can see all the stocks order, SH, PWR, Microsoft. All right. Again, I apologize for change of time today. We're supposed to start at 12, but unfortunately, I have a conflict in my schedule, so started half an hour earlier. We will have recording either by end of today or tomorrow morning. There will be a recording, so you can watch the recording here. You can see the recording of all the previous sessions here as well. We do have a blog, so I encourage you to add info@yellowtunnel.com so you can look at our blog. And which is published every Sunday. And a lot of content on trading psychology, right? It's not only how well you can read the market, but also going through some of these positive, negative visualization rehearsal exercise that we do during live trading room, avoiding trading on emotions, prospect theory. We talk about prospect theory a lot, game theory, that's very important in trading and compounding investment. All right, any questions so far? Sorry, I'm cutting it short, but so I covered, I think right now, at 5,700, I would consider raising cash. At 5,500, I would consider, going long, maybe add to some of your long positions. I still have one hedge, SH, hedge your portfolio and keep an eye. I think this is a trader's market, and in general, you want to buy stocks that are above 50-day moving average, kind of have that short-term momentum, whether it's a General Electric or Microsoft, right, or JP Morgan. These are the strong. You can see some stocks are doing well and are able to trade above 50-day moving average, but some stocks are lagging. And in this environment, this is something that you want to have. Firidun, yes, we do send. I don't know where you are in Europe, but I know in Britain, we have clients in Britain, Germany, France, and they do get SMS messages. So you could sign up with your phone number. We can always test. But, I think if you're in France, Germany, or Great Britain, it should work. Vienna, I'm not sure if we have clients in Austria, but, it's worth a try. All right, guys, you were awesome. Thank you very much. Have a great day, and I will see you shortly. Thanks a lot. Appreciate your time. Thank you, Firidon. Thank you. Jeff, thank you. Dr. Simon, thank you. Peter Cromley, welcome back. Thank you very much.